What's up, tribe? This is Justin, Elevate Credit. Today is day 2, and the title of today's video is What is Credit? Specifically, I picked this topic today because I see a lot, quite frequently in the world, misuse of credit in general. Now, don't get me wrong, credit can be a very powerful tool. Don't get me wrong, we do great things, but used for the wrong purposes and put into the wrong hands, it can be dangerous. So let me share this with you. Just for an idea of what is credit, I Googled it. So Google says credit is essentially an agreement where you borrow money or goods for the promise to repay them later, often with interest. It's a fundamental concept in finance, allowing individuals and businesses, let me repeat, and businesses to access resources before having the means to pay them. So let's back up for a second. If I have an individual who doesn't have the capital or the means to acquire a TV or a piece of jewelry or some new clothes or something that really has no intrinsic value, it's not a commodity by any means. If I now give that person a $2,000 or $5,000, $10,000, even a $20,000 line of credit, that could be dangerous. Now, when I read this, I reiterated and businesses, because when put in the hands of a business, like I said before, it can be a very powerful tool. Be a very powerful tool. Let me repeat that. In terms of business, there are lots of different businesses you can have, right? And there's lots of different ways that you can fund your business to get started in whatever venture that you want. And there's lots of different ways to invest in real estate. And having credit is one of those ways. See, I've learned over the years that the only way to acquire any wealth is by continually investing in assets that are going to kick me back a return in somehow. There's lots of different assets that I like to invest in. Well, 5 specifically, but the biggest one, of course, is real estate. So real estate, I prepare a lot of tax returns, a lot of high net worth tax returns. I've done it in the past. One of the assets that you always see on their tax return, on their Schedule B, of course, is real estate. I have friends that are multi-millionaires because of real estate. Real estate is the quickest, fastest, most, I would say, stable way to creating an abundant amount of wealth. So for that purpose, I love real estate. Now, let's see. I pull up the Cornell School of Law and use this website for consumer law for purposes, for disputing credit reports, getting stuff removed off of credit reports. It says credit means, it's the definition of credit on this website. Credit means the right granted by a creditor to an applicant to defer payment of a debt, incurred debt, and defer payment, or purchase property or services and defer payment. Business credit refers to extensions of credit primarily used for business or commercial. So again, I want to reiterate the business use of credit. See, there's a good debt and there's bad debt, right? Consumer buying jewelry and TVs and cars, that's a whole separate issue. Designer clothes, the consumer that uses their credit to purchase these items is buying into what's called bad debt. There's good debt and there's bad debt. Bad debt is financing items that will not provide any type of return. That is bad debt. Good debt, on the other hand, is investing in a business, starting a consulting business to get off the ground. Investing in real estate with credit that's going to provide cash flow, that's going to provide return in the future. This is all good debt. And credit absolutely should be used for good debt. So I want just to give you guys a quick idea. This is not something that I show a lot of people, but I just want to give you an idea of how powerful building out a credit portfolio can be. It all starts with credit repair, business funding. Let me repeat that: credit repair and business funding. These are the two elements. Your personal credit, your credit report has to be right. That's a whole separate subject. But once you do get it right, building out that business credit can be super powerful. So I'll just show you guys here. This is my credit portfolio that I've built over the last, let's say, 3 years, 2 to 3 years. So you can see in my name here, it's my personal credit. This is the total amount of personal credit that I've built over the years, over $250,000, 272,000. And these are the different entities that I've had in the past, the amounts of credit that I've built out per entity. So, like I said, once you get your personal credit right, you can then build out business credit, which can be very powerful. Look at the example. It's very possible to have 4 different LLCs and $100,000 in lines of credit, $100,000 in credit per LLC. It's very possible to do these things. So credit is a very powerful tool. You just have to make sure that we use it correctly. So in terms of real estate, now these videos are always going to be geared towards building credit, investing in real estate, building credit, investing in real estate, right? They're like peas and carrots. So whenever I analyze a deal, this is my flipping calculator, flipping a house. So whenever I analyze a deal, there's always 2 ways to analyze that deal. If it's done completely in cash here or with financing here, credit basically. And there's different type of lenders and credits that you can use for real estate. It's quite possible to build an entire house from the ground up with credit cards and lines of credit. I've done it in Mexico. It's possible. That's a whole different subject. But in terms of real estate in general, credit can provide you a return with little, sometimes even no money out of pocket. So that's an infinite return on your investment. For example, this is a typical hard money loan, a type of analysis. Hard money lender purchasing a property. So for to exit at $500,000, you can back out your selling costs at 6%, back out your closing costs at 4%. You're going to pay some tax. You're going to pay some fees to the title and escrow company. These would be your net proceeds here. Down here are your expenses. Like I said, there's 2 different ways to analyze it: cash, financing. So we do a financing using a hard money lender. Typically, hard money lenders are going to require that we have some skin in the game, right? We put some of our own money in the game. And so in this case, let's say that we put in 54,000, they're going to finance 218,000. We're going to have to pay them some points to finance the deal for like a loan fee. But then again, we can get into paying our taxes owed, liens, utilities, holding costs, and our build costs. Let's say in this case it's 250,000, so it's going to be our net proceeds minus our building costs minus our hard money fees. And you can see you can get a cash on cash return here that's like outrageous. Right? I put in $54,000 into the deal and profit $130,000. That's over 200% cash on cash return, which is a phenomenal deal. So thank you guys for watching this video. As you can see, credit can be a very powerful tool, and I look forward to bringing you some more content to your success. So